Thank you for joining us at xm.com. You're watching today's Daily Market Comment by Raf Boyajian. I'm Christina Marujos. Regulatory crackdowns in China, ongoing concerns about the Delta variant, and warnings of slower earnings growth ahead all came to a head this week when it was meant to be all about the Fed. Instead, the Fed's snail-paced approach to debating QE withdrawal has put taper fears on the back burner, while new risks have emerged. Stocks in China were back in the red on Friday as the damage inflicted on investor confidence by the recent clampdowns on private enterprises by Chinese authorities appears to run a bit deeper than initially feared. The CSI 300 index was last trading 0.8% lower, and in Europe, the major bourses started the day 1% lower as U.S. stock futures slid. Amazon.com reported revenue that was less than expected on Thursday, and even though earnings per share beat the estimates, its warning that sales growth would slow in the third quarter hit sentiment in broader equities. Nasdaq futures were last down 1.3%. The stock market jitters helped the U.S. dollar steady somewhat, though its index against the basket of currencies was slipping again. The U.S. economy expanded by a smaller than expected annualized rate of 6.5% in quarter two. Weekly jobless claims and pending home sales also disappointed, and the data together underlined the Fed's caution on moving very slowly with any tapering plans. This could weigh on the dollar against currencies such as the pound, loonie, and euro, where the domestic data has been comparable or even better lately. However, in countries where the previously rosy outlook is now at risk because of the Delta variant, such as Australia and New Zealand, the dollar could continue to stand tall against its Aussie and Kiwi peers. In commodities, gold held onto its post-Fed gains but appears to have met resistance around $1,830. If the dollar's losses deepen in the coming days and Treasury yields remain subdued, the prospect for a break above this resistance is strong. Meanwhile, the latest growth scares and stock market volatility have only had a mild dampening effect on oil, as investors are still betting that demand will outstrip supply in the medium term. WTI and Brent crude futures were slightly down on Friday, but on course for healthy weekly gains. This was the Daily Market Comment here at XM. Have a great weekend.